it's not a happy Friday for Kraken. So the SEC is warning platforms to take note of Kraken's move to halt its staking service after paying a $30 million fine to the SEC. We must note that they did not admit or deny any allegations. On CNBC Squawk Box, Gensler said companies like Kraken can offer investment contracts, but have to have full, fair, and truthful disclosures. He went on to say that they were not a company abiding with basic law. Adam, I'm going to kick this one right off to you. After Brian Armstrong's tweet, I didn't expect to see an action come down so quickly. It seems like Coinbase CEO Armstrong probably had this information in his back pocket. What do you make of this?
Yeah, less a rumor and more front-running the announcement that he saw coming. So I think that there's a couple of differences from the story that we were talking about yesterday that are worth noting. First off, this is not actually an action against staking itself. This is an action against companies or against a company that had a staking program that allowed you to basically allow them to stake on your behalf. There's still a bunch of question marks on my side whether or not that's really a distinction that's particularly meaningful in this circumstance, but it is worth noting. So there doesn't appear to be any sort of concern around the actual activity if you're doing it yourself or potentially using, like a decentralized service to do it. But these big companies, it looks like, are in fact going to get whammied by this type of stuff. Secondly, the move here is an odd one from my perspective. Effectively, what they're saying is that the Kraken exchange was offering this as an unregistered security because effectively it's something that delivers yield. But as I discussed yesterday, the way that yield is delivered here isn't exactly the same. The counterparty risk that you bear from a lend product versus a staking product is very different. Because in a staking situation, you're effectively locking your tokens up into a protocol rather than lending them to someone who then has to pay you back. So there's some significant differences there too. But the thing that I've really been puzzling about today, and I'm not sure if this is true, I'm trying to confirm it, is basically that this looks like a pretty low blow gotcha to me. Effectively, in order to even have applied for registration of this program, my understanding is that Kraken would have had to have been a registered entity under the SEC. To the extent that they're a registered entity under the SEC, rather than the state money transmitter licenses that they have to do their business right now, that would mean that they would only be allowed to allow their users to trade in tokens or securities that are also registered with the SEC or that are found to be exempt. Crypto is neither of those things. So to the extent that they were to even try to comply with this, effectively they would be doing so, again, to my understanding, and this may be incorrect, they would be doing so by throwing away their existing business, because to the extent that they were able to get approved for this or even to apply for being approved for approval here, they would have to stop trading tokens which are not registered as securities. So I think, again, like the whole thing is it's another example of, rather than doing this the right way, making rules and having those rules be something that goes through a process that actually involves people who understand what's going on. They just did it as a way to grab more power, and I think it's going to work very effectively for that. So I think, again, it's an unfortunate situation, not too surprising, and probably not the last of this trend that we'll see. Jen, I believe I saw your hand.
Yeah, I'm going to let Zach jump in, but I just want to corner in on that piece you brought up about the lend, yield, or earn programs. Gensler was asked about this on that CNBC interview that I mentioned in the intro, and he said, it's all about labels. Whether a program is called lend, yield, or earn didn't matter as much as the underlying economics. And I just wonder if they are actually looking at the underlying economics and being as thoughtful about this as that statement would claim. But Zach, I'll throw it off to you. I have so much to say on this, but I want to get you in.
I mean, I kind of see the logic of the SEC filing. If you look at it, you say, hey, here's a very opaque product that pools a bunch of funds, and the rewards are divvied out at the discretion of Kraken without much disclosure. And I think that is probably a bad way to operate that product, especially if you're advertising it as an investment vehicle. So the fact that the particulars are suggested in a way that I think the SEC does sort of understand the difference between me using my self-custodial hot wallet and going to a staking provider and delegating my stake to secure a proof of stake network of my choice. They sort of understand how that would work at the individual level, and why that's very different than what's happening in this pool product offered by a centralized finance intermediary. So I think the sort of the overreach and claim of what Brian Armstrong was saying, I think is quite different from what the news and what is actually in the filing itself ultimately ended up being. So I think in a weird way, this is actually sort of bolsters the case for further decentralization, right? For further getting away from these intermediaries who are making these products that, hey, they often don't have especially clear and transparent guidelines around how these rewards are issued to individual members of this greater pool. So, hey, if this is ultimately driving people toward self-custodial staking sites, then maybe that's a good thing in the long run. And I could see some of the logic in the filing itself. But anyway, Adam, I'll throw it back to you.
Yeah, I think that in theory, your statement makes a lot of sense to me. I think in practice, what we're going to see is that people will just stop using these types of products because there isn't an easy way to do it. And again, if you were to compare this to owning ETFs, owning different types of stocks, et cetera, all of these are intermediated products, right? All of these are products that have a company that is effectively doing a bunch of stuff on your behalf. It's also worth noting that Kraken is just closing the system, right? They're just closing this product, and they're effectively not admitting, they're accepting that they will never be able to create another one of these again, registered or not. If this was just a disclosure issue, right? Then why wouldn't they just have done the disclosures? I have to feel like my sense is that there's something here that goes beyond just, hey, there's more transparency that needs to be present in this program in order for it to be compliant. There are other reasons likely why we're kind of seeing this come down the way that it is. So I'm unhappy with this move, but it seems consistent with kind of what we've been seeing. Jen?
Yeah, to Zach's point, I think that Brian Armstrong's tweets showed frustration. And I said that on the show yesterday. As part of this, Gensler said, Kraken knew how to register. Others know how to register. It's just a form on our website. And if they want to offer staking, we're neutral. Just come in and register. Coinbase has heard that before, and the SEC turned around and sued them for one of their products. And so it feels like maybe his statements came from a reactionary state of being, because he's tried to work with the SEC before and has been burnt in a similar way. I want to talk about Hester Peirce's comments on this, though. So she said, not everyone at the SEC agreed with this move. We have known about crypto staking programs for a long time. I am going to play the Canadian card here, and I would like one of you to just explain to me the inner workings of the SEC, because often we see SEC Commissioner, she's an acting commissioner, Hester Peirce, come out completely against what Gary Gensler is saying and saying, I've tried to work on this, but I'm kind of getting nowhere. It feels very odd for me to see these two at odds so publicly. So maybe one of you can explain to me why this continues to happen. Why is no one listening to Hester?
I'll take it if you want. I'll take it. Okay. I mean, nobody can read the mind of any of these people. Ultimately, what it looks a lot to me like is kabuki theater. Effectively, this is, Hester is, I agree with most of the points that she makes. I think that she's very articulate about this and articulates the points well, and articulates the problems with the way, with what the SEC is doing. And the way that they've been going about it, which is a don't make any new rules, don't actually issue guidance, don't have a process in which something is created, that actually makes sense, but instead just take enforcement actions that then try to set a precedent, but in practice don't, because the details usually make it such that they can't. And that also makes it difficult for legal companies to then go in and to operate in these areas, because there's so much uncertainty and you don't know if what you're doing is later going to be something that gets you in trouble. So, I mean, we see this in the Federal Reserve too. We see this in a lot of kind of the more public-facing, regulators and agencies out there. You'll often have dissenting voices that will articulate the position of the people who are frankly going to lose the argument. And that's kind of what it's always seemed like here. She's saying the right things, but she has no power to actually do it. And the balance of who does have power there is unlikely to change, again, because the reasons why the power balance is the way it is, remain. So not the most articulate answer there, but I think that that's what's going on. Zach, any thoughts?
Yeah, hard to say. I mean, I think like the agency is set up so that there is a diversity of voices who can, make it known when they dissent from the actions of the chair. And I think that's a nice feature of American government. But does it mean that one commissioner is going to be heard and the others are not? Sometimes that does mean that. I don't know. How do they do it up there? Is there like a Gary Gensler of Canada?
Yeah, you don't often hear up here this like public, these. You don't hear people who are enacting office like so publicly against each other in this way. And so, yeah, I don't know. It feels different. I feel bad for Hester. And my last point on this is these office hours with Gary Gensler videos need to stop. They're so cringe. I can't even watch them anymore.
That's high quality content.
Have to
What are you talking
them.
about? The proof of stake, There's memes. It's probably no one listens to Hester because she doesn't do the memes.
Let's just get some
Look at this
good legal frameworks. Let's just get some great legal frameworks, and we can pause on the videos.
Proof of stake. Wow. Anyway, that's a big picture of a stake. You often see that from Bitcoin people, actually. Proof of stake. Those meat-eating Bitcoiners.